Hey traders, Raghi here. And in this update, we're going to talk a little bit about a topic that came up in the chat room. And I think it's a really good one for everyone to check out. And that is staying opportunistic while also taking the pulse of the market. And what came up was the Dow Transports and the Dow today. And so before we kick this off, for those of you that may not be familiar with Dow theory, and this is a free video. You can check this out at the Simpler Trading YouTube website, or you can head on over to simplertrading.com/series replay. I know it's kind of a long URL, but maybe we'll put that on an easier to remember URL. But it's a great synopsis of the best parts of Dow theory, at least the parts of Dow theory that I've used the most. And so let's talk about this for a moment. I love this quote from Charles Dow, 1901, Wall Street Journal. A person watching the tide come in and who wishes to know the exact spot which marks the high tide sets a stick in the sand at the points reached by the incoming waves until the stick reaches a position where the waves do not come up to it. Again, this is just support and resistance, right? This is looking at momentum levels. Just a really great way to look at it. And finally, recede enough to show that the tide has turned. This method holds good in watching and determining the flood tide of the stock market. I love this, the flood tide of the stock market. So what's flooding right now? I think you could really say what's flooding right now are the sellers, but when you think about the timing of the last handful of dramatic sell-offs, like last Monday, August 5, Meltdown Monday, the market did not start off in a bad mood, thinking to the Friday close, obviously that preceded it, it's kind of holding its own. And then what happened? We get a tweet, we get a currency retaliation, and then boom, we end up with the sell-off that we've seen. Well, I think what's interesting is, if you look at Sunday's open, just yesterday, we were actually climbing higher in the Asian session, and it was only after, when you look at the futures, it was only after the London Open and going into the Asian close that the news about the Hong Kong airport closing due to protesters hit the airwaves, and boom, the strength that we saw in the Asian session and the European session and in the UK session just never really looked back, and it sunk into the US Open. So the idea of, for me, why the markets are down have a lot to do with geopolitics. Now, I don't think in recent memory, I can't remember, whether or not there was a recession so broadly discussed, so mainstream as the one that everyone's expecting now. In Charles Dow, he talked about the fact that the market discounts what it knows. What's known is discounted into price. What's known is, as we say, baked into the cake. Well, if that's known, and the recession conversation has gone as mainstream as it's gone, and the market doesn't really sell off until different news bites hit it, I'm still of the opinion that we could go up to the overbought resistance and possibly retest that before heading back lower. In fact, our edge is at the edge. That's something I talk a lot about in the room. If we have two layers, the high and the low here, my edge is at the edge, my advantage, right? Here, it's a coin flip. And in the middle, if you're going to play the coin flip part of the distribution chop, then position size is really probably the most important part of this. Imagine flipping a coin, 50 times its heads, 50 times its tails. The difference between succeeding in a coin flip environment really is position size. And, that's a big part of, I think, what's so important right now, the sort of the math of the market that I've been talking a lot about. So we did put on a quick day trade earlier today. It was a quick NASDAQ buy between 76.05 and 75.80. Rode that up to the clearing range high and then called it a day. I do end my day trading right around 11:30 Eastern, and I will not day trade the rest of the day. If there's a setup to be had, it'll be something else. And you might say, well, Rog, what about if there are big moves in the second half of the day? So be it, right? I'll start looking at my swing trades, my daily time frames, my swing trades. The second half of the day, the first half of the day, I'll look for day trades. And I'm pretty stoked that we took a move from this area and this area up to this area. And if I can do that every day, that's all I'm looking for. So that was today. We'll see what happens tomorrow. I'll be doing the open with you all. So if you just recently joined the chat room, tune in tomorrow at 9:20. I'm going to take you through trades like this that we did, where we took a long position at 76.05 and 75.85 and rode it up to 76.25. On a day like today, I'm pretty darn happy to take some profits and be done with the chop and slop and uncertainty by 11:30 a.m. Eastern. We'll do that tomorrow. I'll see you in the next update.